All right, so we're watching the market again. Remember the risk disclosure. Futures trading is very risky, and you should only use risk capital. You can trade really small size if you want, or you can even use your simulator. But we recommend you just, you know, work your way into watching the room, learn how to trade with us, and then start out small and build your way up. It's like in any job or business. That's what you do. Your first day on the job, you have to feel around the office, get a feel for what's going on, get to know who the people are, and then you start learning the work you're supposed to do. You learn from other people what they're doing, and then you gradually get into it. So I'm just kind of watching here to see if we're going to get a real Chapola market type deal, or if they're going to try to turn them around right away here, virtually right away. We do have support, at that number I said 57 quarter and 58, but there's nothing to do just yet. We're just kind of waiting to see what the next opportunity will be. Now the whipsaw is coming in now, and to be expected. To be expected. There, we're going in this little whipsaw zone here, halfway through the two minor Fibonacci retrace levels. Now they're trying to whipsaw it back up through there. So we're watching this 64 quarter level here. The dynamic trend band is crossing over the the dynamic trend band number 2 here, and we do have a counter on the crude. We got a counter buy arrow coming in here. So what we can do now is watch and see if they flop back lower on the crude. Looks like they're trying to hang on to the 50 handle there. So everything's kind of up in the air. They're shooting up to 54 there, and that's fine. Or 64. A side of me wanted to try to get long down there, but it's okay for now. We don't have to worry about it. Let's just see if they're going to try to turn this mess around. Got the Dow getting blasted down 156. It was a lot worse a while ago. There they go, trying to reach up to that center of the center of the Fibonacci number there at 67.5. So let's see what we got here. Odds are they're going to resist them up there. It's a little bit risky. A little bit risky trying to work the resistance up here, but let's go ahead and go short at the market. Going short at the market right here. Short at the market. 66. Stay ready to jump out. We're looking for 66 where you should be short to get hit with selling and roll back to 63. Okay. 66 short, rolling back to 63. Just stay ready to jump out. Maybe they're going to get a little more hyper, but odds are they could be close to getting another pullback from here. That was a little bit intense jump over the center of the opening range here. Let's see if we can break 66 down and get the thing moving back lower. Looking for a dip down to 63. If they can get them down under 66, the next level to watch is going to be 64. Is going to be really important. I might even clip them there, but if they can break them down, generally with a type of deal like this, on that rollback to the center of the fibs, they're going to try to explore the low again in a full kind of choppiness mode here. So let's see if we can hopefully get the thing to break down under 66 where we're short from here and start to put some pressure on the downside. Again, back towards 63. Okay, watching to see if 66 can lose ground, and we're going to be watching 64 very carefully if they can, and ideally a roll back to 63 here. So let's get them going. Let's see if we can get them going. 64 breaking down, and then ideally punching them down through 64 to roll them back to 63. Bearish bias is still intact off that rally. Okay, and cover them up right there at the market. Cover them up there right in that dip. We like to take the free gifts there. 350, a fast dip down to 350, and then they pop 64. So we got out 64. 66 short, covered them up at 64 on a pop down to 350. I would say they're still going to 3, but when they make a fast dive down towards our price, I like to usually grab them. Not always, but the reason for that was we were trading in against a short-term micro bullish chart pattern there. Plus 2 points. Okay, so that puts us up plus 475 on the mini NAS points. And we're just watching and waiting for the next trade setup. Now, okay, this is not a boomerang buy for crude. This actually could facilitate a sell trade as long as they generally hold under this 5011 area. Maybe they pop it, but it's not a buy trade because we don't have the crossover, the dynamic trend bands, or any kind of matching colors on these dynamic trend bands. The dynamic trend bands, if you're new to the room, and thank you, by the way, to all our new guests, is this thicker solid line, and the thinner dot dash line is the dynamic trend band number 1 and 2, and then we line those up in line with the buy or sell channels. It's really simple. Boomerang's known worldwide for being one of the simplest systems to trade with, and definitely one of the most profitable. With our on crude oil, we have 90% guaranteed winning trades. It's guaranteed that the software will produce 90% winning signals. That's a guarantee that I make. It's not. Don't mix it up with guaranteeing gains in futures or any of that. The disclaimer still stands, of course. The regular futures disclaimer that futures trading is high risk and all. We don't guarantee you'll make money. We guarantee that the software will produce 90% winning signals. Very, very important. It's just like a car. They'll sell you a car and they warranty it and all that. They're when you buy a new car and they hand you a 50,000-mile warranty or whatever, they're guaranteeing that the car will work really good and guaranteeing to fix anything that doesn't work right. They can't guarantee that you're not a drunk idiot and you drive when you're really roasted and you crash into something. You see what I mean? Hey, you guaranteed my car and it got crashed. You see what I mean? It's the same exact logic. I have people say, well, what kind of guarantee is that if you don't guarantee I'll make money? I mean, and I say, look, buddy, you don't belong in the futures market. You don't get it. If I sell you a brand new car and I guarantee that the car will work good and here's a warranty, and you go out and crash it, you don't come back and say, well, you guaranteed the car would work good. Get a clue, you know what I'm saying? So similarly, it's the first time in history anybody's ever done this, which is to guarantee 90% winning trade signals. So, you get a little, it's a new thing, so that's all right. I don't mind. Let's see where this thing's going to go now. Let's see if they can dip them back to 350. It was good we clipped that 350, wasn't it? Because they bounced them back, and now they're hovering in the limbo zone here because we are in a, like I said, sort of a semi-bullish pattern here. Nothing, there's no crude oil signal here. They are hovering above this level here, the 5012. That's, who knows, maybe crude tries to spring back. I wouldn't be surprised at anything in the markets. In fact, I got a big note on my desk here. I read it every day. It says, do not, oh, well, one of my rules, do not trade in hyper fast markets, but it says, what is going to be the surprise today? Always looking for what the surprise could be, and always being prepared for some surprise. Like today, everybody, nobody expected, I don't think, the market to get crunched this hard, but it did. And right now the bias, like I said, a little bit in limbo here because we got you can see them coming up and banging on this 50% retrace. This is the full Fibonacci up here. Odds favor if they jump up to 70, they're going to, head back lower in more of a trend type trade. Yes, it's true. We are in a kind of a limbo zone. I know they're bouncing off this, but you know, where do you get in? Well, you have the dynamic trend bands crossing over. You have a pullback on the signal line within the context of the new up arrows shooting up. Odds are very hard to get these pullbacks. What happens is the algorithm fires on the new buy channel, and then simultaneously, in the midst of the hyper candle, there's a pullback signal line. So that secondary algorithm is going to kick in and fire off a signal, a dot on the signal line. But you can't really. It's usually very hard to get into those. Okay, here we go. So I'm watching my charts really carefully now, getting ready to get us some more trades here. Although we don't care if we trade or not, doesn't matter. Watching for the possibility. Now we have matching dynamic trend bands here, but in this type of, the trade may work out because the system works so beautifully, but in this type of spiky upside move like this, even though they're above this key dash line, this is a high risk trade with all these spikes up here. So I wouldn't want to take a buy trade. Let's see, 1, 2, 3, 4, 5. They're not going to mark a pullback the signal line. So regardless whether the crude oil keeps rising up or it pulls back, I'm not going to take this trade. Too many spike candles here on the upside. That's the reason. So we're just watching now. Okay, here we go. What do we got? What do we got here? Got some more whipsaw. Key support level, or, well, line in the sand really. Make it or break it is 47.65 here. They are, they're trying to stretch that fib number up there, 47.70. So we're going to keep an eye out up there for the very good possibility of there is a key number right at 47.76, kind of a stretch up number. I don't know if they're going to make it up there or not. We're watching 70 very careful on this full Fibonacci retrace. But breaking down under currently 65 quarter may send them packing again on the downside. I'm not attached to the buy side or the sell side. I just want to get us the right trade on the micro side of the bias. That's what we do with me, Nanistek, what I call micro scalping. Just a term I made up because we're trying to trade within the context of Boomerang, but a lot of times we'll take reversals for 2-3 points as you've seen today. So let's see what sets up here. Okay, breaking them out through that number now, that 65 quarter I told you about. Actually getting them hammered a little. Did I miss something? Yeah, I kind of did. There was a crunch in there. I kind of missed it. We can see them getting hit here. Kind of mad at myself now for doing that. That's okay. We'll see what happens here. Okay, watching now. Watching for a short right up at that line again at 65 half. We're going to take some risk up there. Watching 65 half to go short. 65 half going short. You have the limit there. I'll call it out. 65 half. See if we get it. Stay ready. Don't fall apart on me yet. Okay, here we go. Still watching 65 half. They just ran up to 65, was it? Yeah, 65. Oh no. Yeah, 65 even. Didn't give us half. I got my numbers, so let's see if we can get them. They might fall apart from here. I probably should just grab 65, at the market. They fall apart on the downside. Don't be surprised. Well, there is some support stuff coming in now. Never a dull moment. All right, well there they go. It's too bad. We'll get them. There's some support stuff coming in now, so let's see here. We're just waiting. Actually, I missed. It was back up there at 67. There was a crunch signal. I missed it. And I missed that 65. Moved to 60. Well, now it's. Oh, boy. Boy, do I wish I'd taken that. But we would have been out for 2, 3 points anyway. It's not the big move. We don't look for those. Don't really care. 64. I'm looking at it now. Yeah, 65 was a high. I was calling out 65 half on a limit. I thought for sure we'd pop that. I just didn't want to jump in too early because I thought they might come in and try to re-ramp them back up towards 67. So I just didn't want to get in trouble with that. All right. Wish I would have caught that crunch, but that's the way the mop flops. Let's see what we got here. Let's see. Boy, I wish I would have caught it short and held it for the whole move, right? I wish I would have shorted 67.50 like I was saying and covered them up at 56.75. That's right. Would have, should have, could have, it's called. Missed it by 2 ticks and would have, should have, could have. Got to blow this stuff off all the time in futures. You can't let it get in your head. It'll drive you nuts. It's one of the main things, and I'm going to eventually have a webinar on that. How to clean that stuff out of your head if you miss something by a tick and then they collapse on a short, like basically what we just had. 65 half, they went 65 clunk down to 56. That's okay. It's the way the mop flops, I say. I got that from one of Elvis Presley's first movies. It was back in that era when it was just crossing from the beatnik era, before the 60s rolled in, 56, and he had that movie and somebody got burned on a recording deal or something. He goes, well, that's just the way the mop flops. I'll never forget. I thought it was pretty funny. Anyway, let's see what we got here. Resistance at 64.25. And probably they're probably going to roll back again. I'm trying to okay, be that way. They're back up to that 65 number. 66, back to that number we were looking to short them at. Remember that? Okay, let's take some risk here and go short at the market. Go short at the market right here. 67 even, 67 quarter, 67 half. One of those ticks, you're short at 67, watching for a pullback. 67 half, watching for a pullback to 64. Short at 67, watching for a pullback to 64. Let's see if they can hold them back here. Hopefully, stay ready to jump out. We might have a problem with the trade, but I'm looking for 67 to flop back to 64. We got to be careful here. They might try to bounce them. Ah, crap. Come on. Give me a break. Exit at the market. Ah, forget it. They're jamming it. Look at this big spike move here. Sorry about that. Missed that deal there. Had to get out at 71. Too bad, too bad. 67 short, out at 71. Yeah, that was just a big rip on the upside there. Um, Not much you could do there. They just decided to ramp the thing up. Okay, let's see what we got here. Okay, and go short at the market here. Going short at the market. 73.50 short. Watching for a move. $73.50, watching for short, watching for the potential to roll back to $68.50. If we can break them down under, let's see here. Yeah, it's tricky out here. It's getting a little tricky now. Get a little tricky, doggone it. Hold on a second here. Still looking for him to roll back. It's getting a little tricky here. It looks like we got some rigor activity here trying to artificially pop up the market here. Stay short, 73.50. Watching for 73.50 to roll back 5 points to 68.50. That's what the setup says here. We got to get him down under 71.75 first. Got to knock him down lower, but it looks like we might have some rigor activity here trying to. That last spike up to the upside struck me as being some kind of rig up job there. Too spiky, too dramatic, I don't know that there's so many buyers looking at this market thinking, oh yeah, I just can't breathe another minute until I just buy hundreds of contracts. Looks like a rig operation. Let's see if we can break 73.50 down first. If they're going to take them back on the sell bias, but we got to be careful now. It looks like the riggers may be involved in the market here. If not, then 72.75 breaking down. Very key number at 72, and then down under 72 we could roll them back to 68.50, but we'll just see what we can get out of it. Let's see if they can roll them back here. 68.50, a key number right now, breaking down under 72. really key number at 68.50. They may just be able to take them back down there. Let's see if the riggers are not there. They'll back off here, and this upside ramp up will get faded. And I'm trying to see if we can fade them all the way back down to 68.50. So hold short here. Let's see if we can take them down. Blow them out under 71.5 is a key number. Taking 71.5 out and losing that number, and then we watch 70 handle. Now again, if the riggers are present, they're going to tend to support those even handles. So 70 is going to be really vital. If we can break 71.5 and then send 70 packing, we'll get our 68.5. But if the riggers are involved, they may come in and try to defend that 70 handle. Let's see what happens here. So far, see the 150 is kind of hanging up here. Let's try to work the ticket at 70 now. Looking for 70. 68.50 is gone. We're going to work 70 if we can. Watch out for any spikes as a sign as possible rigger activity here. Working 70 on this 350 short here. 350 short, working 70 handle even. Let's go 70 quarter, just in case what I'm saying is correct and the riggers are going to try to prop up 70. 70 quarter, working 70 quarter on the short here. Working 70 quarter. Oh, come on, let's go. See if they can break them down. Working 70 quarter. Working 70 quarter. They're defending it a little. They're defending that 71.5, it looks like. Doggone it. Come on. Give it a second here. Ah, shoot. Hold on, hold on. Doggone it. Still like the move to 70 handle, but we may have to grind just a little bit here. Let's see if they can back them off again here. 70 quarter, we're working a tick above the 70 handle in case they try to defend it. Let's see if they can take another one on the chin on the downside here. Odds are okay that they're going to go down to that 70 handle here. So let's see if we can move them lower. Stay short here. Stay short. Let's see if we can back them up. Still looking for a lower move. Let's see if the sellers can come back in with full strength here and start punching the market lower. Still looking for a move to the 70 handle. 68.50 still may be in the cards, but I've kind of abandoned that number because of that last rigger ramp up. The concern struck me that maybe they're going to come in and play games with the 70 handle here. It's still starting to look like that. Notice the spike back up here. Yeah. So it'd be so much easier to trade if we didn't have to always factor in the riggers, you know? But when they're present and you try to short stuff, you run into problems. Even when all the indicators may line up on the short side, they'll just walk all over them because they got an agenda. Let's still hold out. I still think the sellers have still got a lot of punch out there. Let's see if we can roll them back. Let's give it a chance to see if we can roll them back, knocking 71.50 out again, and taking them down to 70 quarter. Okay, once again, watching for a dip under 72 to work lower and then possibly dip down to the 70 handle. Watching 150 now. Let's see if we can blast them down here. Get them down going under 150, hopefully. Just for a slight pullback under 150. See if they can just get a little more selling punch. There we go. You see, somebody's defending 150 here. That's that number I gave you earlier. Let's see if we can take 150 out, knock them down to 70 quarter. Here we go. 75, 75. Can you believe it? It's exactly what I was forecasting here. Let's try it again. Try it again for quarter. Half, half, cover them up. Exit. There it is. Right when I said exit, they hit 70 even, took out our quarter. So that's good. And they're going to 68.50 probably, but I had to work it the way I saw it there. So um, we'll just sit and wait for the next trade here. That was 63.50 short, covering them up at 60 quarter for plus 3.25. So that puts us up 4 points so far. Um, just chipping away here. We had 4 trades so far. Number one was plus 275, plus 2. And then the third one, they just got away from us. It was this deal here. I was shorting back into the bias, and then what looks to me like the riggers just kind of blasted them higher, desperately trying to recover the market. And now you can see they're kind of supported, but it's in a semi-bullish pattern here. So now that they've ran the fib number, you can see what they did. Look at this. I ran the fibs here. Market got blasted. They came back to the center and started dropping like a stone. And right here, when that on that 1, 2, 3, fourth attempt in the center, that's where what strikes me as being market riggers jam the thing all the way back up to the highest retrace level there, which was the bottom of the opening range as well. Well, the highest retrace, a full retrace of the whole move, is up here. This is the bottom of the opening range. See that? That red line buried under there. That's the center of the opening range. So they jammed them up on that fourth attempt at the center of the move, all the way back up to the top of the opening range, and then they collapsed them here. And that's where we were shorting them there up at 73. No big deal, but that's what happened. I can see it now. So, the jury's still out if it was the riggers here, or if it's just some buyers saying a forced. It looks like riggers. Forced stab at the center. Really, that's a reason to get them up in the opening range, because you got to remember riggers trying to make a bullish market, which good luck today, down 151 in the Dow after yesterday's slaughter. But the point is that, or that slaughter that was not yesterday but the day before. Wait a second. Oh, yeah, yeah, on Tuesday. Wednesday was just kind of a recovery day. Anyway, Wednesday was that day where they had them down strong on the Dow there, 200 points. Anyway, so it matters in the sense that if we see the riggers attempting rig jobs like this to rejack the market up back into the opening range, which is what they try to do when it's a down market, naturally buyers may come in off the lows and bring the market up, but when there's an artificial jam to get it back in the opening range, a lot of times that may be market riggers. So the point is that we have to see how well they do, and right now they're not doing very good. So let's just keep that in mind. Let's see what we can do here, and watch for the market to give us our next trade setup. Market going into hyper overdrive on the downside here. We had that last trade 3.25 gain, and then, well, that was trade number 4. Then trade number 5, we just scalped them on the long side, 66.50, and they shot right up to 69. We clipped them at 69 for plus 250 on that day. That's 5 trades, 4 winners, 1 loss. So we're just watching for the next setup. Like I said, they're going into hyper overdrive, so my rule normally is to just stand aside and until things settle down a little bit. No need to go in and go crazy. So be back with you shortly. In high-speed desperation, the riggers are trying to bring that crude oil back up and bring that U.S. stock market back up. I was watching 67. We had sort of like a paper trade because the market is moving at hyper speed. So when it does that, I usually just stand aside. Not a big deal, but 67 long, and they just ramped them up. Still are. That's okay. Doesn't bother me. We're up 6.5 points total, close to our 8-point goal here. And we're just watching for the next trade, seeing if market can settle down a little bit. All this hype hasn't done much to improve the Dow. It might. They might get that Dow improved a little bit here. Let's see what happens. Look at that. Boy, they're really going for it. They're really trying to turn those algorithms around. I just had an algorithmic shift on the 5-minute mini NAS there. So the 5-minute, if they can hold it up, I don't know if they can hold them up in this area or not. That ES is blasting off that 2106 area. 2107 I gave you before it happened early this morning. Told you that support number. Sure enough, they lifted them right off of there. Okay, let's see what's going on here. Kind of bringing them back from the graveyard, aren't they? That's good. Yeah, I like the bullish market, but it's really, we're in a bearish kind of trend mood now, a sell down mood. 2107 was achieved today. The next level, 2100, really good shot at some support coming in down there if they try for it again. But everything's just really kind of wild. There they are trying to jam them right back up into the opening range. There's the center of the opening range and the top where the market fell off the wagon today all the way from this level. That's exact where they dropped them off today. They're trying to get the thing all the way back to recover this big strong down move here. They're trying to pretend that it's a bullish market here. Let's watch for resistance up here. Okay, I'm watching for some resistance here. Let's see if the next stretch up level, 85. Not sure if they'll make it up there or not. Watching all the signs here. Last high 79.75. Working a tight stop. Let's go short at the market right here. Working a tight stop. Short at the market 77 half. 77 half short. 77 half by quarter. 77 half. Let's see if we can get them down to 74. Let's see if we can break them down, hopefully. No more spring back here. Let's see if we can break 77 down and get that thing to take a drop down here. 75.50 key number. Breaking 75.50. They should be able to give us 74. Watching for 76 now to get crunched, and then 75.50. 76 getting crunched, 75 half. Oh, should be willing to break down in here, I believe. Let's see if we can knock them back lower here. 76.50 breaking down, then 75.50. And if we break 75.50, odds are they can swing them down to 74 for us. again, any hard, fast dive under 76 down to 75 or lower, stay ready to jump out. That's the rule. I always like to repeat it so you know. Any hard, fast dive under 76 where they go flying down to 75 on a fast dip, stay ready to jump out. I don't want to take any guff from this trade. I got signs that they can roll back, but there is some spiky rigorness in this deal here, so I just want to be careful. I like what I see on the short side, but let's be a little bit careful here and make sure they can break them down under 76. Hold that pressure under 76. That's going to be really important here. Hold that pressure under 76 and not try springing them and flipping them back here, which they might. Yeah, they're trying. Let's see if they can break them down under 76. And get them to let a little air out of the tires here. 76 or lower, breaking down. Hard, fast dive to 75. We cover targets 74. Got to get 76 out of the way and watch for a hard, fast dive if we do down 75 or lower. And if it slow grinds lower, which is fine, if they slow grind them under 76, we'll look for 74. Give it a second here. Stay ready to jump out. I don't want to take any guff from this trade. We need to see 76 breakdown pretty soon here. 76 breaking down. Key number 76 quarter. They're not doing it. They're not doing it, but they should. But let's oh shoot. Hold on, we're short from 77 half, 77 quarter. They're still playing games here on the bullish upside deal. Let's see if they can knock them back here. Still looking for them to break down. Just be patient here. Watch for 76 or lower to kind of kick them lower, start a downtrend, mini downtrend. So all we want is a mini downtrend because we're micro scalpers here. So let's see if we can break 76 down. Really key number right now, and they're not breaking it. Hold short. Watch for 76 to break and run them down to 74. We're right on the verge here. The concern is what's happening, that they might try to spring them back. I still think they're going to break, but it's not. So far, it's struggling to break them down. Okay, doggone, shoot. Damn riggers. Exit at the market. Damn it. Problem was that 76 wasn't breaking, so we had to get out. Doggone it. 79. Shoot. 77.50 out at 79.50. Yeah, it's just 2 points, but it still makes me mad. I can't help it. Hate to lose. Hate to lose on those trades. All right. Games were played. We got out at 79.50. Right at that 76. They just wouldn't break it for us. I still think they can, but it strikes me that this is some kind of a rigor agenda here. Try to prop this thing up. Darn, wish I could have got out. Had a little bit of a profit there. I wish somehow. I mean, I just thought they're going to break it, but this is starting to look like the riggers are involved in the deal here. More and more, it's starting to look like that. All right. They got him up to the center of the opening range now at 80.75. Once again, let's take a little risk here. Go short at the market. Short at the market right here. 80 quarter, 80 half. Short at 80 half. short at 80.5, and we're watching for a pullback down to key number right now 77. 80.5 short, watching for 77 to break. We'll put this back at 76. And let's see if somehow this time they can break 77 down and knock them down to 76, which was that last key support number. Let's see if we can do it here. Okay, 80.5 short, looking for a move down to 76. Got to get them to break 77 quarters, a real key number right now. 80.5 short, looking for 77 quarter to break. And if it does, we will probably get a fairly smooth dive down to 76. Now, here's where we try to determine if the riggers are going to keep playing games here. If it's really rigged up here, they're going to keep backing up the dips. In hindsight, that last little dip was a good deal for us, but I really think they're ready to crack lower. Not a big sell-off or anything, but just, look at it. Yeah, see, there are signs that the riggers are involved here because these little micro pullbacks, and then they snap them right back up. We got to be careful here. Again, 77.75 now is the key number. 77.75 cracking should pop them back down lower, but there are signs coming in here that the riggers are playing games and all these little micro dips are getting bought up by them here. So we got to be a little bit careful here. Let's try to hold short again. Come on. Hold on. I mean, arguably there's a little bit of a bullish pattern here. I'm just trying to fade that move up to the center of the opening range. But there seems to be an agenda to snap up these little dips, and that's usually a sign of rigging. Even more than what we've seen with this big spike move up is the way they act when they pull back. They're not going to let them drop, and then crunch, they hit them again on the upside. Let's see if we can back them up. Got to give it a chance to try to break 77.5. If they do, odds are we're going to get 76 going again. That was that key number that they wouldn't let slip. Let's give it a chance to break 77.50 and dive down to 76. Let's give it a chance here. Give it a chance. If they can't break 77.50, then to me it looks clearly like the riggers are getting involved here, propping up the market artificially. And in that case, we're going to have to be extremely careful with shorts. Look at this junk. Doggone it. Stupid rigging crap. Oh, crap. Here they go again. Still trying to give it a chance here to break down, but it's starting to look very much like some rigger involvement. Let's see if they can break. There's still a lot of bears out there, but I don't know. This is a real key level right now, and it's stay ready to jump out here. Let's see if they can break. Back under 79 and then back under 77.5. They should be willing to crack back down lower, but you know who's got their finger on the trigger here, snapping up these dips. One more chance here to see if they can break. Finger on the trigger, ready to jump out any time here. Stay ready. Key breakdown level 78.50. It's shifted higher. 78.50 breaking should send them packing, but you can see the minor dips getting snapped up here by the riggers. It looks to me like the riggers are involved. I'm trying to give it a chance to break down. We may be disappointed. They may try to ramp it up again here. Let's do this. Let's go ahead and exit at the market right here. Exit right here at the market. 80 quarter, 80 half. Break even trade, and this way we're out of the risk of a big rigger ramp up here, and we're out of break even on the trade. 80 half out at 80 half. They started breaking down, but we just couldn't get them going. Now you can see what's going on. Yep, absolutely rigger involvement here. We're up plus 450. Yep, games being played. They're trying to push the algorithms around. Back up to the top of the opening range here at 84. Boy, are they trying hard here. Let's go short right here at the market. Short at the market right here. 84 quarter. 84 quarter short. Stay ready to jump out. Let's see if they break down the top of the opening range. Stay ready. Jump out. 84 quarter short. And we're looking for a move back down to 81 or lower. I'll tell you when we get there, if we get there. Okay, 84 quarters short. 84 quarters short. And watching for a move to break 80 half and break down lower to 78 half. Okay? Watch out here. Let's see if they can crack 81.50. 81.50 cracking should send them 81.50 cracking should send them packing. That's cute, huh? 81.50 cracking should send the market packing. Okay, watch, and then if we get a hard blast down under 80, we're going to cover them up. Watching for 81.50 to break. 81.50 to break lower. They're still playing these stupid rig games here. Okay, they did actually hit 81.50, so we're now looking for a downside move, hopefully. But I can tell you right now, the riggers are still trying to play games and prop it up above the opening range. They got to the top of the opening range. That's exactly where we shorted them. So now we're watching again. Oh, shoot. It's really difficult here. One more chance, see if they can break down. They should be willing to break down lower again, but clearly there's a rig operation going on here, trying to prop up the upside here. Let's give it a chance, see if they can slide. Key number now, 175. Breaking under 175. 175 or lower could send them down to 80 handle. If we get a hard fast dive under 81.75, that knocks them down towards 80. 81.75 breaking down, screaming back down to 80. We're going to go ahead and cover them. I can just let you know that in advance. 81.50 breaking down, hard fast dive down towards 80. We're going to go ahead and cover them up down towards the even handle. So watch for a break under 81 and a possible hard dive down towards 80 to just hit your exit button. Otherwise, 78.50, 78.50 on a slow grind. Right now, though, you can see they're coming in and kind of propping them back up again here. Watching for 81.50 to break down and see if we can slide this thing down to 80 handle. Hard fast dive to 80 handle, cover them up. Watching for one to break and then a hard dive down towards 80. They're still propping them up. You can see it going on here. They're still trying to prop them up, but I think we got a date with the 80 handle again. Hopefully. Hold short. Watching for a hard dive down to 80. If that happens, we can cover them up. Otherwise, slow grind, hold for 79 area. Here we go. Let's see if we break. Breaking 81, hard dive to 80 will cover them. If it's a slow grind like we're getting now, just a slow grind lower, watch for 79. Riggers are scratching their head going, what to do? Have we confused the sellers? Have we backed them off? Stay ready. Still watching for a hard drop down to the 80 handle here under 1. High caution with the riggers, very active here. Let's watch for another little breakdown. Smash under 1 down to the 80 handle. We cover them up. Otherwise, slow grind lower like we're getting. Watching for 78.50, 79. It's worth it to hold short here. I think we're going to get at least a lower move down to test the 80 handle. Let's see if we get it here. They're not letting them break so far. Let's see if we can break them. One coming in, one coming in. Watch for a break. Games are being played by the riggers. They're propping them up here, supporting them up. Let's see if we can break 81, crack them down to 80 or lower, try to cover them up. This is a slow grind here. Hold short. Okay, go ahead and cover them up right here. Cover them up. Exit at the market. 80 quarter, 80 quarter, 80 quarter, 80 half, 80 75. So we're out at 80 50. We'll use 80 50. It was like 80 quarter, but 80 50 is all right. So short at 84 quarter. I think it was 84 half, 84 quarter. Like to make sure you guys get in, and covered them up technically at 80 quarter, but 80 half is also correct. So plus 375. All right, well, guess what? And there's that 79 action that I told you we'd get. What, I got the low coming in right here, 79 half. Anyway, we were right on the deal. It all worked out, and we've hit our target goal now. So we're done for the session. Right on time for this 11:30 to 12 period, which is always a good time to get out and kind of watch for a little bit of a limbo market to come in. So we're up for, I'll go over all this now. We're going to review all the trades that we've done here, and we've hit our targets. Let me do the review real quick. I'll do the math for you and everything. And so we got, we're up 450 as of our last trade, number 7. 450. How's crude doing here? Hold on, let me check crude real quick. Now, we've got the dynamic trendman crossover, but you notice you got to trade the short for the trade to be correct. You got to have a flat dynamic trendman number 2. That is not flat. It'll be flat when I sit the cursor on it. See, when I put the cursor on number 1, that's flat. When I put it on number 2 right here, it's not flat. I mean, if I put it right at the tip, it's flat, of course, but that's, you got to back it off so you can see if it's going to flatten out here. So, plus, we got upsloping filter lines, these orange lines, and very upsloping filter lines. Generally, the trades are best if they're in a sell case under this dashed line, but we do have the orange line in the sand on Boomerang here, so it's a little bit of a mixed bag. I'm using these new filters for our live trading because we're going to be auto trading crude oil, and I'm just trying to filter them out a little. Technically, we are under the filter number 1 here, and the key filter number 2. We're watching for a lower move here. Otherwise, you know, why get whipsawed? Why have a stop out when you don't have to? So we're watching. This is still steep here. So we're watching, and now a counter arrow. So had we shorted here, the counter arrow is generally a sign to just exit the trade and try to front run the stop. In other words, theoretically, if someone said, oh, they're crossing over, so it's short at 41, and then this arrow flashes, you know, it would have been, it didn't hit the stop, but it would have been close. So we're still watching for this. It's kind of a mixed bag here on crude. So all I'm saying is watching, I got these lines here. What I'll do is I'll put this red line right on crude here. I mean the dynamic trend band number 2, so you can watch to see if it flattens. In other words, if it flattens up on this red line, then we'll have a sell trade. But now you're getting a counter buy. That's why these filters really help us to stay out of the trades that may not be exactly right. Anyway, back to the math on NQ. As of trade 7, we're up 450 plus 375 on that last deal. That's plus 8.25. So there we are, hitting our target goal of 8.25 times 20 bucks is plus 165 per contract. Just ignore this meter here. It does not reflect the trades that were made. It's what I call out in the room exactly, and that we calculate with our exact live trade setup. That's what counts. So I'll zero that out. Let me give you the numbers again. Plus 8.25 with 8 trades. Trades are okay, getting a little heavy though, but we've had 8 trades, 1, 2, 3, 4, 5 winners, 1 0 break even, 1 for 2 minus 2, and 1 for minus 4 on that big spike up that happened earlier. 165 a contract, 8 trades, and I use 450 as a general commission rate, 36 bucks. So we subtract that out, 165 minus 36 bucks, up 129 per contract. And then we always measure based on what I call a blue collar working trader times 4 contracts, puts us up plus 516, right there in our target goal of hitting a $500 to $1,000 paycheck every day if we can. This is futures trading. It's very high risk, and we try to hit our goal every day, but you know, sometimes you can't. But we've got 4 winning trades on the crude oil, plus 516 net on the 4 contract blue collar working trader account. Mission accomplished. And we're going to take a look now at just kind of standing aside, closing the room, but I'll leave the charts up and everything for a while. No crude oil trade. Our filters saved us, as you can see. That's why I've added these on here. And I'll discuss these on the Boomerang training session next Wednesday. That'll be next Wednesday. I'll discuss those filters. They're just for crude oil. They can be used on the mini NAS, but so far I'm not really doing that. It's always good to use filters. You know, in trading, you're just trying to filter out price movements and data, just not just the indicators, but basically price movement. And you're just looking for things that give you a little bit more information that might help. Not too much, because then it can confuse you. But if it's just enough to give you a little edge, so I call these filters. They're not indicators, they're just filters over the Boomerang indicators, because we are planning on trading crude oil on the auto trade. Anyway, so markets turning back up, trying to hold on to a bullish kind of deal up there at 84 at the top of the opening range, but sort of struggling in that area, as you can see. So now, if they fail up here, we then watch for the pullback under the original crunch level here, where they killed them this morning. See that? Holy smokes. See? That's where I marked the fibs, right from where they hit them. They brought them all the way back up into the opening range. That's why we mark these numbers every day. Through the halfway, tapping out the top where we just got that last short for about 4 points. And now, and coming into this exact time here, which is where European markets tend to exit the U.S. market trading. They got better things to do, like sleeping. Across the pond. Our friends across the pond. Our mates. All right, so here we go. They're trying to jam them up above the opening range, clean up the mess on the Dow, getting that crude back up over 50. Well, what we've got now is a buy setup, matching dynamic trend bands. Did I miss this? Yeah. Matching dynamic trend bands right here. I missed this. I was busy doing the calculations. Let's see if you would have been on high alert with the dynamic trend band blue here. By opening here, opening a channel, right here, we are right on the cusp. We're above both the filters. See, notice, this is really important. Notice how this filter number one, I'll call it number one, prices moved up to that and above it here. You see that? So technically, we're watching for the blue line here. So this technically was a boomerang signal here at 47. Do you see that? Above this filter number one, blue here, the filter price above that confirms that that it was a trade. Pull back to the signal line at 48, and they jammed them up to 59. Typical boomerang. They just always seem to hit that 10 ticks. It's amazing. And now they're flopping back lower. So that was our fifth winning boomerang crude oil trade in a row here. And like I said, in a couple weeks, we'll have auto trade available for the crude oil trades. So far, just doing fantastic since I started the service, which is just a few days ago. 5 winners yesterday, 5 winners today so far. The previous day when I started it, I didn't have the filters on, and it was a really choppy day. As you recall, it was Tuesday. The market was down 200 plus points, just getting roasted. Crude oil, we had 3 winners, and we had because I didn't have the filters, that's why I created them. I was closing them out. We had a 4-tick loss on a kind of a break even because I had a counter sell arrow on a buy trade. A same thing with trade number 5, a counter buy arrow 6. I was using that as a signal, just exit the trade. So net on the first day we got into it. Now a lot more experience using our filters and everything. We got that day there was net plus 10 ticks. $100. So net on the ticks, approximately 10 winners plus 10 ticks. So, about $1,100 per contract, maybe 1,000, let's say, in just the 3 days on one contract, per contract. Then you have to subtract out the commission, everything. Anyway, we'll get into it. We'll develop this thing. Now crude, look at that. Totally taking one on the chin here. Excuse me. And no pullback. So that's the wrap up there. 5 winners in a row on crude. Total of net approximately 11 winners total over the last 3 days. Since we just got started, I added those filters and we're up hitting our target goal today for plus 8.25 points. Yesterday we were up 3.25. It was again kind of a busy day. It was kind of real choppy. You couldn't get them going either way, but we ended up ahead. So that'll do it for today. And thanks very much for joining with us.